Goodbye CBILS and bounce back loan, and hello to the recovery loan scheme. In this week's Business Finance Bulletin, a whole episode devoted to what the new government support programme is going to look like. If you tuned into the last episode of the Business Finance Bulletin, you will have heard me say that there was a possibility that the Chancellor would be calling an end to CBILS and bounce backs and introducing a new loan support scheme. Well, that has come to pass. On the 3rd of March, in his budget, the Chancellor announced that there's going to be a new recovery loan scheme, thereby calling an end to CBILS and bounce back loans. After numerous extensions since they first came out in March 2020, the deadline of the 31st of March this year is now being kept to. So after all of the support that these two loan schemes have given businesses, the end is now coming near. Now, the schemes have served UK businesses extremely well. Across the two schemes, a total of 1.6 million loans have been dispersed, a total amount borrowed of £73 billion. That's a huge amount of money, which undoubtedly has been an important lifeboat for many businesses. But all good things come to an end. And so we've now got from the 6th of April a new scheme opening, the Recovery Loan Scheme. Well, on the 31st of March, we close the door and say goodbye to two old friends, being the CBILS and bounce back loan. However, on the 6th of April, we reopen our doors and we welcome in a potential new friend, the Recovery Loan Scheme. Now, before we look at the features of the new recovery loan scheme, let's just reflect back on the difference between the new and the old. Well, first of all, the CBILS and bounce back loans, well, that was very much about survival money, money to keep you going. This new recovery loan scheme is about money to keep you growing. It's a bit of a mindset shift away from negativity to thinking about more positive things of growth, renewal and expansion. So good to see that the government recognises that businesses may be in need of more cash in order to start growing again. So let's take a look at some of the key features of what we know already. The scheme has got another 4 weeks or so to launch, but we've got enough to start thinking about what it looks like. So first of all, in terms of the amounts, you can borrow up to a maximum of £10 million. The starting amount, well, that depends on the facility you're looking for. If you want an asset finance or an invoice discounting facility, the minimum amount is £1,000. For term loans and overdrafts, the starting amount is £25,001. In terms of the term of the facilities that you want, well, for term loans and asset finance, you can pay over a maximum of 6 years. And for overdrafts and invoice discounting, it's up to 3 years. Again, as with CBILS, the government is guaranteeing 80% of the debt. However, you must remember that the business will still be liable for all of the debt. It's the lender that gets the guarantee. If you're a director of a limited company, as with CBILS, and there'll be no requirement for a personal guarantee up to a facility amount of £250,000. And what can you use the money for? Well, it's all about growth. You can invest in plant and machinery or working capital to help you grow. All good, positive things coming out of this scheme. Let's move on now to look at the differences between the schemes. Now, first of all, under the CBILS and bounce back loan schemes, you had a 12-month moratorium before you made your first payment. Under this scheme, unlike an ordinary loan, 1 month after your drawdown, then your first payment kicks in. So you have to make sure that your cash flow is robust enough to make that first repayment. Next up, under what was called a business interruption payment, the government on your behalf paid the lender's arrangement fee and also paid the interest for the first 12 months. Well, under the new scheme, you were responsible for all of those costs on day one, just as with an ordinary loan. In terms of the interest rate, whilst the bounce back loan was fixed at 2.5%, lenders were able to charge under CBILS a maximum of 14.99%. There was a cap in place. Under the new scheme, lenders will be able to charge what they want based on their assessment of your risk. So an important point to bear in mind, this scheme will be more expensive. But the key change, though, is going to be in the way that the banks and lenders assess your request. Now, under CBILS, over 50% of applications were refused, and I anticipate that the refusal rate is going to be even higher under this recovery loan scheme. The banks are going to be very much looking at supporting businesses that can demonstrate they are viable, Remember, this is not about survival money. This is about growth money. So they're only going to be supporting those businesses that have a strong future ahead. So the key thing to remember here is making sure that you can demonstrate that you are a viable, growing business and understanding that you now bear all the costs from day one. What actions can you take now after all this information that I've given you? Well, first of all, if you still have a need for funds and you haven't yet applied for either a CBILS or a bounce back loan, make sure you do. The deadline 31st of March is there for you to use. And if you do have a need for funds, apply now because it's going to be cheaper for you than applying for under the recovery loan scheme. So the key thing is make sure you get all of your information together to make sure you beat that deadline. After the 6th of April, well, if you think that you could do some recovery money, start putting a business plan together now, making sure all your accounting information is up to date so you can get an application in very early. This scheme finishes at the moment on the 31st December 2021. May be renewed again, who knows? But at the moment, there's about a 9-month window to make sure that you apply. Well, there we are. That's it for a very special bulletin looking at the new recovery loan scheme. Watch this bulletin for further news as that product and facility develops. So that's it. Thanks very much for watching and listening. And as ever, if you did like it, please give it a like, a share and subscribe to this channel. So thank you very much. Look forward to being with you again next time. In the meantime, have a great, successful, healthy and safe week.